Hello everyone, welcome to our new webinar. It's October 13th, so hope everyone had a good weekend despite that massive sell-off that we have seen on stocks on Friday. Before we can begin, just let me know if everything is fine. I can see that Ashraf is here, Enes is also here, so I think that we are good to go. So, as you know, a lot is going on. We have plenty of mixed signals. War in Gaza, it looks like it's ending. The US government is in a shutdown, but you have this, again, US-China tariff threats as China makes their own some kind of restrictions or on rare earths. So, Trump, as we know him, always comes out with some strong rhetoric, and that's why market reacts the way they did. It's not surprising. We know what happened back in April when tariffs was a big deal, and if this topic is now again under spotlight, it's not really surprised that we have seen such a strong reversal down on these assets. But we know that when days will pass, of course, rhetoric may calm down and change a little bit. I can already see some titles that China rejects Trump's tariff threats and they're looking for dialogue instead. So obviously no one is satisfied with any kind of tariffs. Of course, they want to reach the agreements, and there will be some news coming out. I'm pretty sure that will be maybe positive for the markets, and that's why markets could maybe stabilize a bit. However, looking at the S&P 500 here, keep in mind that we are still in uptrend, and this sell-off, which was around few percent, 3% or so, is still not a big deal. But of course, because market was relatively high, especially technology sector, whenever we see just very sharp fall in relatively short period of time, everyone thinks that this could be it. Of course, it's very important to also look at the volume. We have seen a pretty strong volume here. I think it was the strongest since spike in volume since what? Since April levels, when we had this massive sell-off going on. So before that we had this some interesting volume as well already in March. So I'm just wondering if we are still, because of just one day event, that we are maybe still just in the middle of this corrective retracement. As you know, we have been looking in the past that we are expecting at least a wave 4, and if I can label this as an wave 4 ongoing retracement, then I will label it as a wave 4 rather than calling end of a multi-year bull run up here, because I understand that after this shakeout that will occur on the way up, there's still obviously a chance that market will resume higher. But I want to see firstly a free wave retracement from the highs, and for now that's not really the case yet. So if you look here, that was only one leg lower. At the same time, obviously VIX has spiked higher. There were some reports that some noticed that VIX was trading higher even when the S&P 500 was also moving to the upside. So for some that was an early signal, and now when we have finally VIX explosive move higher, this could really be a signal that we are stepping into the period of uncertainty, and obviously there is a chance that stocks could stay sideways and possibly even ideally retest lower levels, while we may see VIX maybe even moving towards these higher ranges here. So for the S&P 500, I am observing, as I said, a free wave retracement. So I will not be saying that we are at the beginning of a new bear market. I'm thinking that we are in the middle of this ABC setback. But whenever stocks, as you know, because stock market will impact the FX, cryptos even more, and whenever we see this sell-off of around 3%, and this causes a massive sell-off on cryptos, of course we just have to respect what can happen elsewhere on other assets. Even dollar could rally if we see further weakness here that would be maybe confirmed here on the S&P 500 for a deeper correction, then obviously dollar could be a real deal. Now it's interesting that dollar did not see such a strong reaction higher. In fact, at some point dollar was actually trading down against some of the currencies on Friday. So in my opinion, what would be a real potential threat or signal that we are in some serious risk-off mode if we are going to see some very strong explosive dollar moves to the upside, like we have seen to the downside on Friday on stocks. Okay, for now that's not been the case yet, so I'm thinking that we are just maybe we'll see some different but still sideways price action here in flows in this wave 4. So ideal supports could be at the previous highs from February, because whenever we think we are in uptrend, of course, if we passed these previous highs for a lot, then on a pullback, on a higher degree pullback, I want to see that the previous highs will hold as a support. If that's not going to be the case, and we at some point starting to break below and towards 6,000 level, then I think that the important major top is in. But as long as we are above that level, I think that it makes sense to look for this to be a wave 4. Okay, so ideal supports. The first one could be at the 23.6%. That was the previous red wave 4 degree here of that bullish wave 3 cycle. But below that we have even the 38.2%. Now, when it comes to FIPS, the 38.2% could be the ideal support for the next rebound, but because that was a very extended wave 3, much more than 161.8% of wave 1 from end of a wave 2, which is usually the ideal target for a FIP for a third wave. That's why I think that maybe pullbacks will not be that deep, could be similar in price compared to this wave 2 of the same degree, and that this takes us to the 23.6%. So that I think is the first potential very strong support area. Keep in mind that we also have some gaps from this weekend on a futures market. Okay, we know that gaps are very important on a cash market. We talked about this in the past. I specifically said that we have, after this fat spike here in September 17, we haven't filled this cash gap right here back from September 11th, and then once again we turned lower, and what's even more important is that gaps on futures will maybe even more important and could get filled. So if you will look at the futures, we have the gap away from 6,500 where the market basically closed last week. So at some point we still could fill this gap, then maybe make some ups and downs within these ranges before we may, after some period, we see final exit to the downside. So we are from neutral to short term, maybe even bearish here on the stock market, right? And I'm just wondering what will happen with the US dollar. As I said, the dollar haven't seen any massive break to the upside. Okay, we are testing this trend line. Of course, this could lead us to potential reversal point. I still somehow I'm observing a different scenarios, because what we have here, if you zoom this in, we have only 3 wave rise from the lows. We have also this unfilled gap, and I'm just wondering how could this gap get filled. We just either see a straight push to the downside, then market would leave only ABC decline, or maybe that's also possible scenario is that we will keep moving higher, and then once we make a 5-wave rally, then after 5 waves market will make a 3-wave retracement, and then maybe we will, at some higher degree correction, we will try to fill this gap. Okay, so I still think that at some point we will, even if the market has already bottomed, there will be opportunities to join this trend. I just don't think that we will see straight push to the upside without filling these gaps first. Okay, so the question is, will this gap be filled after 5 waves up, or maybe was this, as I said, an ABC rally, and we can even retest the lows first for much more longer ending diagonal. But we are certainly moving into the stages where I think the massive dollar bear run here is coming to an end, and I have been talking about this a lot in our past weeks, and it looks like that we already have some signals here. Also, what's interesting to look at is the dollar index seasonality chart here. Here you can see that in October, dollar has made after some ups and downs, which maybe we consider that that gap could be filled at some point, could also make some very interesting comparisons. So maybe we'll see again after a pullback, again more upside, which again could make sense if the stock market is really headed lower for a deeper fourth wave retracement. Looking at the euro dollar, obviously is the very similar picture here. Now our primary first wave count was still pointing that maybe after all we have seen a top here despite having only 3 waves down from the highs. But if you look here, it's very possible that we will make 5 waves down from that current 3 wave drop rather than completing wave C down here. So it looks like that on the intraday time frames, euro is coming under pressure. As you know, euro came to the downside after this French politics crisis that when Prime Minister stepped down last week. We have seen euro-dollar just resuming this downtrend, and now on top of that we could have some flows to safe havens if stocks would really continue lower, and this could put some more fuel on the fire regarding this potential further weakness here. And when I would be even more confident that most likely we are here trading impulsively if we will see this current weakness that would extend towards the 161.8%. Why this is important? Because as I said already before, I mentioned when I talked about the S&P that whenever we are tracking impulsive sequence, wave 3 could make the 161.8% of wave 3 measured from end of a wave 2. Whenever you are tracking wave C could make only 100% of the first leg. So this zone right here, it's a very important. So if through this week we will just keep moving lower, then certainly I would be looking for much deeper correction in euro, because I think that the important leg has finished up here from January lows. Now it's also interesting that cable has held these supports here on Friday. In fact, we are still seeing some stable price action. I'm not really sure if we are seeing end of a wave C, or maybe this wave C will extend to the downside with 5 waves. I certainly think that you should be aware of bearish price action. If we see a daily close below 13250, then I think that really bears will take us even lower. On the upside, watch out for 1.34. If we overlap and see a daily close above that level and out of this downward channel, then I think that we will just keep moving sideways here. Also, there were some comments from Bank of England's Green, who said that case for higher for longer rates, okay, and they could be skipping cuts, and that's something that could also maybe keep pound supported. But overall, of course, it's still ongoing sideways consolidation, and maybe not easy to find some useful setups within this July and June levels here. Aussie. Now, commodity currencies, as you know, could be very sensitive to the risk off flows, and we have much more to risk off rather than risk on, and we have seen a pretty aggressive sell-off here on Aussie. It's also because, as you know, Aussie is linked with China, and that's why this was hit quite hard. But if we look here on a daily chart, we are not really seeing any kind of changes regarding the higher degree direction. In my opinion, that's still important low here at April levels at 0.5900 area, and we could just be headed maybe slightly to the downside to retest even more important supports. So last week, as I said, that firstly I thought that already we are going to see more upside, straight push higher. Of course, I was wrong with that call. This correction just becomes now even more complex, but as I said earlier, there will be some, again, after this sell-off, after some very bearish warning signals on Friday, again, there will be some positive news. Politics and markets in general are desperate for positive news, especially after this kind of event. So market could still stabilize in my opinion, and there will be in the next few weeks some positive hopes on agreement, any kind of a deal between China and US, Aussie will very quickly stabilize, and again could be one of the best performers. So I still think that, of course, we are not in that stage where I would call end of a correction. It could be ongoing flat, it could still be a triangle if we suddenly see a move higher, and then that drop will be seen as a completed ABC within a triangle. But overall, as I said, it's just even more complex pose here, and unfortunately we have been trapped in this very nasty price action, not only for the last month or 2 months. It's been the case since May, basically, if you take a look here. Maybe even some kind of a, what I see right now, maybe even some kind of a expanding triangle, or maybe even not. Could be unfolding as well here. Anyway, I just think that that's not a done deal yet, not to the upside, not to the downside, but in the near term to the downside is at least what we should look for, and potential supports around 0.6400 area. Let me just grab some water. Yes, I will take a look on silver, Brian. Okay. Now let's take a look also on dollar Swiss here. Now, yesterday we have seen yesterday on Friday we have seen Swiss franc moving sharply to the upside at some point. Keep in mind that Swiss franc could also be seen as a safe haven when things go wrong on the market, especially in stock markets. So at the same time you could see metals, especially like silver, and you could see Swiss franc moving both higher at the same time. So I still suspect that maybe this ending diagonal could still be the case. If stocks could go even lower for within that wave 4, and we see more risk of flows that could spread elsewhere, of course dollar Swiss franc, even if dollar would be seen as a safe haven at some point, Swiss franc could still do better. But keep in mind that Swiss National Bank said plenty of times they are watching the Swiss franc, especially if it will strengthen further, they will act if needed. So the important is, again, maybe more than dollar Swiss, look at the euro Swiss, because that's what they are watching the most. And here there's still room maybe for another push to the downside. Even if we take a look here on the latest recovery here, it's not really impulsive, looks like a very sideways price action, but possibly there is an ending diagonal, and if we see new lows here on the euro Swiss, that's when I think that Swiss franc could be very closer to very important reversal point, and maybe at the same time this will impact dollar Swiss as well. So that's for euro and dollar Swiss. Now looking at dollar yen. Dollar yen, it's trying to find some resistance. It's interesting to know that we are here now having 2 open gaps from this week and from the previous week. So I still think that dollar yen will reverse lower. As I said, I think I said this last week, that we have plenty of gaps on yen crosses, and that we don't know what can trigger to fill these gaps. Could be a risk of flows, could be something else, could be BOG, who knows. But at this time it looks like it's more probability that it will be the risk of loss. So dollar yen, why I also think that it could come to the downside is because I adjusted the wave count a little bit when I was updating my charts through this weekend, and I came out with an idea that rather than WXY, this could be even a triangle in the middle. So this even strengthens my bias that we could be closer to potential resistance, because if we are really breaking out of a triangle, then we are now closer to potential resistance or reversal point, because we know that moves out of a triangle occurs in a final sequence of this recovery from April lows. So I think that there is a chance that we will see more weakness, and if this 151, this weekend gap is filled and then this level is broken and you see daily close below that level, then we could start attacking maybe much lower prices and we'll move back into this triangle pivot area around 148. Now looking at dollar Mexican peso, despite seeing this recent break higher here, we really quickly turned back to the downside and trying to stay at some stable levels. So the fact is that that was a free wave rise in Mexican peso. As you know, it's been doing very well. It's been trading quite well despite some other currencies that were trading much lower. So overall performance of the Mexican peso, in my opinion, could still stay here, and maybe dollar Mexican peso will revisit the lows. But keep in mind that we could be in a few weeks we could step into the final stages of this diagonal of wave 5 that belongs to an extended wave 3. So firstly, I thought that wave 3 has ended here, which is still possible, but because we have free wave rise from the lows on a smaller scale, I just think that this leg belongs to this ongoing weakness. So maybe retest the lows and then we try to stabilize as we go to the final months of or weeks of this year. Now, crude oil. As you know, last week we talked about crude oil. We said that there's a very nice potential resistance around $62-63 per barrel, because that was a very strong sell-off, and we have seen only free wave rise into that area, and you can see that there was a very nice interesting sell-off. What was really interesting about crude oil is that there were some reports when crude was trading around above 62, very steady despite some strong reports and titles in the media that Gaza war could be coming to an end. So I was just looking at it, and it was just a matter of time when crude oil will finally reverse to the downside. And now if this tariffs issue between US and China is again an important topic, then demand for crude oil will also change, and that's maybe even the important signal why crude oil is also turning lower. And what's also here now important, we even have this unfilled gap around 58.21. So I still think that there is a chance for more weakness. The only question is this going to be a wave C for higher degree complex correction down from that June highs, or maybe we are going to see an impulsive sell-off? Well, even in a third leg, wave C of a free wave decline, there is room for 56, because that's where third leg would equal, wave C would be equal to the first leg, around that area. And we have this unfilled gap, so there is a potential new resistance around 60.50, the previous swing low. So as long as we are below that level, even if we retest it once, still we could stay in this bearish mode. But when it comes to the higher time frame charts, not really sure and convinced if we are here trying to complete then this wave B very soon, and we will see a new recovery later on, or why did this? Okay, or maybe we are going to see a new low here. The reason why I'm somehow leaning more towards this potential interpretation is because if you take a look on this one, we are still trading away from this very important level, away from $67 that we talked about in the past. That's one thing. And then this is also very important, ExxonMobil, as you know, that's very important when it comes to very important for performance, especially when it comes to crude oil. But if we take a look here on the whole cycle, it's definitely bullish, right? But even if it's a bullish, we are just now sideways, and this sideways consolidation could stay in play here for a bit longer. Why? Because we have an A, B, C, D, E legs, and wave E is still missing. What caught my attention last week is that we have seen a spike down from that 118 area, which was also here a gap, and I think earnings, no, I think there were earnings that were released here or something. I don't know what is important, that we had this massive gap that was filled here. No, that's from April when Trump announced these tariffs. So we have seen this gap that was filled, and now we are trying to roll over. So I think that if we see more weakness here, then even crude oil will stay lower as well. Look at this perfect timing of the top. So that was the crude oil top here, Friday 26th of September, the same time when this also ExxonMobil also made a top. So I think that if we get wavy pullback, even with the limited weakness, there's still enough room for crude oil to even retest these lows. Now, gold, metals, as you know, they are still in very strong uptrend. Now we are just extending through our targets here, but obviously we are in a wave 3, but who knows when this wave 4 will just show up. If there will be more uncertainty there, then obviously it means that this market metals will be even more attractive. So I just think that metals will stay in uptrend. We shared last time dollar versus Chinese yuan chart, which shows that maybe we're just in a stage where dollar Chinese yuan could see more upside. It means that gold could easily stay in recovery mode. Wait. Now, if we take a look here on the 4-hour time frame, I adjusted the wave counts and looked at the sub waves a bit different than last time, but I still think that we could be here now riding higher for a wave 5 of an extended wave 3. So watch out for this wave 4, but whenever this wave 4 shows up, I think that the first very interesting support could be around 4K level, then maybe even 3,950. That could be also the interesting, which was the support level of this wave 4 of the smaller degree. So obviously that's still a bull run, and if you see just any kind of a free wave retracement, just be aware of more upside later on. Looking at silver, still in a higher degree, 5th wave here. We just broke back in September, broke out of this base channel, so it makes sense to just respect what the market is doing and maybe be aware of even further gains. Of course, if there would be some kind of a retracement, maybe keep an eye on these previous highs from 2011. That could be a very nice support around 49.50. Looking at the 4-hour time frame here, we're still just waiting whenever this much higher degree wave 4 will show up, this consolidation, this pause that will be maybe very similar to this wave 2 of the same degree. That's when much clearer opportunities, in my opinion, could show up. So my assumption is that we will still retest this 2021 highs, which could be 2011, not 21, which could be an interesting support. The first one, the lowest one is around 48 area. Now, when these metals could finally turn into some kind of a corrections, well, maybe watch gold-silver ratio, what will happen this week down here at this trend line. We have this impulsive sell-off from that highs, and if we will stabilize and turn higher, maybe that will be the first signal that both gold and silver could see some new correction soon. Now let's take a look on cryptocurrencies. Now, as you know, cryptocurrencies, as we've said this in the past, whenever something goes wrong, cryptocurrencies are the most sensitive, okay? And they're very, very volatile. And what it's interesting that we have seen this kind of a reaction right now in October, the final month of this 3-year bull run that we have been talking and watching, paying attention to this before. So the only question is what will happen, the most important question is what will happen from here. Well, keep in mind that we are basically in a stage where, and we have seen already some massive extremes here regarding sentiment, especially if you look at Google Trends. And you can see that search term of Bitcoin has reached the extremes here basically this year during summer. So basically we have already seen some very important maybe sentiment that it's not a surprise that we are seeing this kind of reversals happening. But maybe what's important to add is that Bitcoins or cryptos in general, as I said earlier, they are moving in cycles. So if you're more looking like a longer term opportunities, you want to see a correction. So you can see that we are at, I'm looking at this cycle model here. I had some cycle model in the past, but somehow I lost this chart. So I'm once again showing it here. So I just think that we are on Bitcoin, we are here at the upper side of this cycle model. So there will still be obviously opportunities, in my opinion, in the future, but it would be maybe much easier to find them if we see some interesting pullbacks, because based on this structure that we are seeing, we are at very, very high levels. So of course, in the short term, there could be still some opportunities on the long side, but if you want to just be maybe away from the markets for a few months and you're not watching these chart stickers, market moves each day, then of course you won't maybe sit on your hands and waiting on a deeper pullback on clearer opportunities. So I think that the next retracement, whenever it will show up, it will be just another maybe fourth wave that belongs to a higher degree uptrend. And of course, I'm not sure from where this reversal could show up, but what is important is that we have 5 waves up here from that 2022 low. So sooner or later, I think that we are coming into the important top formation. And with the recent sell-off, we just tested important level here around to 107k. We even liquidated some longs here. Down here, I think that around 107, I shared and talked about this data liquidations map in the past, and we basically retested this, and now we are turning higher. But I'm not really sure if Bitcoin itself is the best at this stage to look for potential opportunities. Well, what is really important and interesting is that if we take a look on Bitcoin versus Ethereum, we'll go back to 2017. So back here, you can see that Bitcoin has basically made an important top in December of 2017. So after this first sell-off, when Ethereum has also seen a massive decline, alts were able to recover quite nicely and reached a new high, with Ethereum printing a new high just 1 month later after a very nice pullback. But you can see that Bitcoin did not follow through. So what happened at the same time, obviously, is the Bitcoin dominance has been trading to the downside. So when I look at the current situation, if I think that we are closer to this end of the crypto bull run, I want to see how the Bitcoin dominance chart is looking at the moment. And if you look here at this drop from June 2025 highs, you can see that we can count 5 waves down, and this recent reversal to the upside with a spike and now turn lower, it's a signal that Bitcoin dominance is maybe looking for more weakness. So what this means that is that because everyone just always wait on a final massive alt season, there are always, when you see such a short event happening on a Bitcoin from all-time highs, it's not necessarily that investors will move from Bitcoin into fiat. They could be moving from Bitcoin to other coins, okay? And they will seek opportunities on alts that will look somehow from their eyes much cheaper rather than owning Bitcoin at these high levels. So in my opinion, there is a chance that we will see some interesting price moves on alts, and if we are going to see really this push to the upside on alts while the Bitcoin dominance is trading lower, and if Bitcoin will just remain below the recent high, I just think that this will be the important signal that if Bitcoin is not following to new highs with the other coins, that we are really entering the final phase here. Also, with that in mind, if we take a look on the Ethereum here, you can see that we have made this very nice deep pullback. We are still not seeing on a smaller time frames, not seeing an impulsive recovery from the lows. But if we will see print higher prices and move closer to 4,500, I think that that could be a quite important signal that we completed this correction, and later on, after a retracement, you could obviously be looking for more gains. So this is a pretty key level for now, 3,500. Of course, if I think that fifth wave has started, I want to see that this level somehow will stay in play. If we break on any new further sell-off, if we break this lower trend line support of this channel, then I'm afraid that we are headed much lower, and whole picture for cryptos could change. Okay, and here's also this liquidations heat map. As I said, there were plenty of stops pick up around 107. I'm not seeing any kind of big stop levels right now, so maybe market will stay somehow a bit sideways here for the near future, till markets and investors will finally again try to speculate much more, because we know that a lot of leverage positions were taken out on this sell-off. Okay, traders, I hope that you enjoyed this this presentation, this webinar. If you want to join us and track these market cycles on especially intraday charts as well with us on a daily basis, make sure to visit us at wavetraders.com. Also today I didn't cover US stocks. I will look at some of them through this week and maybe update our clients in the chat room. By the way, it's still a beta version, so if you are interested and want to see what I think about some of the US single stocks in our latest edition, it was published 4 or 5 days ago, so still you can download this report absolutely free. So traders, good luck this week. Make sure to subscribe to our channel, press a like, and hope to see you next Monday. Bye.